Okay, that's the amount of data that we have got. Those are our guests with us, Siddharth, Shubhada and Dr. Sen. Dr. Sen, you first. Can you detect further dovishness or not so much?
So the impression I get is that they were taking a call simply on two things, which is their reading of what was the likely trajectory on inflation and the output gap.
Yes, sir.
It really surprises me that they didn't reflect on the other dimensions that go into the way one conducts monetary policy. There's some reflection on the global economy, but not on issues like what is happening to the banking sector, what is the play in the rest of the financial sector, and all of these should be taken when we're talking about monetary policy.
Yes.
Now, insofar as the two sort of indicators that they have all taken into account, inflation projection, I don't think there's any big disagreement between the members of the MPC and most of the economists in the country, which is that inflation is going to moderate, at least for the next quarter and possibly a little bit more than that. And then after that, there may be an uptick, but how strong that uptick is, nobody's really been able to project. And I don't think that's even feasible.
Okay.
But as far as the output gap is concerned, I've always been puzzled as to what is the data set that's used to measure output gap. I suspect that most of them are doing it essentially based on the rate of investment and therefore consequently deriving what they believe to be the capacity of the economy. But that is not necessarily the right thing to do at all times.
Okay.
So if you have investment which is going in to not to expand capacity, but to modernize, to improve technology, lower costs, that's not going to widen your potential capacity.
Yeah.
And I suspect that there is a certain degree of overestimation of the output gap.
Okay. I'll come back to you in a bit, Dr. Sen. We've the others also joining us. Shubhada, your first thoughts. What would be your key takeaways?
I think 6-0 debut was quite clearly a pronouncement of dovish take by most of the members. And from what you read out in terms of the commentary by all the members, I would say barring one or two who did have concerns on, the slower trajectory of inflation being often only in the near term and going forward, we need to be more vigilant. I think that tells you that probably, there are some concerns for going forward inflation trajectory by at least a couple of members that I could assess from the reading. But in our own assessment, we believe that currently we are seeing is only a near-term downturn, and nobody knows how the output gap is going to close up very quickly.
Okay.
And that would have its impact on the concern, elucidated by the stickiness of core.
Okay. Shubhada, I'll get you a printout in just a second so that you can give me some more perhaps spin on what do you see as their future outlook? I mean, they've not given it very directly, but there is at least Mr. Dholakia saying that he sees the potential output of the economy rising. And you have both Patra and Patel telling us that they see distinct reasons to be vigilant about the fourth quarter inflation. For me, somehow all these don't tie in with the lowering of the neutral real rate, but that's just an off-the-cuff assessment. Prasanna, Chief Economist, ICICI Securities Primary Dealership Unit is with us. Prasanna, your key takeaways?
Yeah, so I think you kind of pointed out there seems to be some dichotomy between the members who belong to RBI and the external members. RBI members clearly are worried about some upside risk, whereas the external members are more sanguine. And of course, the common aspect is I think all the members have cited weak growth prospects, particularly on the investment side. I think they've cited either the capacity utilization or output gap. Which seems to be an element of commonality across all the members. And the third is the surprising part, like you pointed out, is there's no mention of any real rate. Also, there's no mention of any forward-looking inflation estimates also. Although they had the MPR estimates available to them, they've decided not to incorporate or not to comment on that.
Yeah, I take your point. In fact, I'm also a little disappointed that there is no mention of when they are trying to reach that 4%. I mean, the mandate of the committee is 4%. And to, eke out your way by saying that I've got plus minus 2% and therefore I don't have to give a date for the 4% is, for me, of course, absolving yourself of the responsibility of reaching 4%. But like in the media conference and in the analyst conference, the MPC minutes are also silent about when they expect the economy will reach 4%. But Siddhartha Sanyal is also with us, and as is DK Joshi of CRISIL. Siddharth, you go first. Your takeaways?
Well, I'm not too surprised, Latha, that there is no mention of immediate target of 4%. I think for RBI at the moment, it's a real long-term target, which they will not be too adamant of reaching right now. At this moment, if they can contain inflation within the 4% plus minus 2% range, effectively, if they can contain inflation within 4 to 6% kind of a range, I think they will be reasonably happy. They possibly don't want to get themselves too pegged to a real interest rate target also, because earlier also we have seen in the previous regime at some point of time RBI mentioned about 1.5 to 2% target, then kind of softened their stance, because in the previous regime also, if you see, real interest rate had not really always been 1.5 to 2% range. Occasionally it had been much lower. And at some point of time, RBI introduced concepts like real 3-month treasury bill rate or some of the other rates, not only the real repo
I agree,
rate, so
Siddharth. They played they played fast and loose with it. And I agree that this was, to some extent, a media-manufactured question, perhaps with me being guilty of repeatedly asking for the real neutral rate. But I mean, let my questions be set aside. Your key takeaways just from the statement. Do you glean anything in terms of forward-looking statements or attitude of the MPC members?
Well, I'll just try to flag 2 points. At this moment, all the members seem to be reasonably accommodative in terms of their stance, so it will be difficult for them to change that particular stance quickly. So we'll definitely factor in one more rate cut over the course of the next few months. Having said that, if you see, as Prasanna also mentioned, that if you see the comments, particularly from the RBI officials, they want to stay guarded about the possibility of an uptick in Q4 of the financial year, that is Q1 2017. So that will play a crucial role. If there is not too much of a threat, we'll definitely see room for one more rate cut by early 2017.
Okay. And Mr. Joshi, what are you able to smell from this with respect to December or thereafter?
Well, I think it's hard to predict December, but looks like, I think, as of now, if the inflation trajectory continues to be downwards, I think there could be a possibility of another rate cut, though it is not it's not hinted at all in the minutes. I think what came out of this minutes was that there is a general consensus on rate cut, but I think some of the members, I think even outside members, they were a bit cautious. I mean, talking about stickiness of core inflation, I think that was one of the concerns which one member raised. And then I think apart from that, the central bank stance was more or less clear from the monetary policy, where they had said that the upside risks to inflation remain, but they have come down from the past compared to the past. So I think there is a caution from the central bank side on inflation. So I think my sense is it will be more data driven, and we'll have to see how the data plays out over the next couple of months.
Okay. I think stickiness of core inflation was something which Chetan Ghate referred to. The persistence of core inflation remains a concern, was Chetan's point.
Latha,
Yeah, so actually that was my next question to you. Since you have it in front of you, what will you guess as the next step? Is there anything that you can glean?
I think the first point that I glean through is most of the members seem to be dovish in the near term. I think, yes, a couple of RBI members are putting an upside risk to the last quarter, but largely, including Chetan Ghate, he seems to be saying that, structurally and cyclically, there seems to be an abatement. Now, that tells me that it will go beyond just the 2 quarters. And to me, a large part of the committee membership tells you that they are dovish as far as the current fiscal is concerned. The opinion remains divided. In fact, there is not much of a view going forward for the next fiscal year. Perhaps I was anticipating much more in terms of each member's estimation of growth and inflation, the dot plots akin to, FOMC. So how does each member see the trajectory going forward, whether it's going to be demand-fueled inflation, which will reverse the current momentum and trajectory. So I think on that aspect, perhaps the committee is not as vocal as one would have anticipated.
Okay, well, actually, 2 charges come from my Monetary Policy Committee over here. Dr. Sen saying that not pointing out to financial sector issues like NPA or other financial sector rigidities is certainly a gap or certainly lacking in the statement, an important, probably negative in the statement, which hopefully will be filled in future. And Shubhada pointing out that a dot plot chart or some kind of a forward-looking estimate of inflation or of even the direction 1 year forward is lacking in this statement, and maybe that will be something that we can look forward to. So 2 things which the Monetary Policy Committee perhaps could have given us details on but didn't. Dr. Sen, any further comments? Can you glean from their leanings as reflected in the statement how much space there is to cut in their estimate?
Well, I don't want to be cynical about this, but the sense I'm getting is that this particular MPC statement is essentially trying to allay fears about hawkishness. I don't think the MPC really got down to business in this meeting. It was convened, just shortly before the meeting took place.
Yes.
So I suspect they're just doing a stage setting, and it's the next MPC which will really tell us what their thinking is. I think this was just a positioning.
Okay, that's hardly cynical, sir. I think that would be realistic. They had hardly about 10 days to prepare for this all-important meeting, probably 48 hours of briefing from the Reserve Bank staff as to their own forecasts, professional forecasters survey and household inflation expectation survey. So that's a fair assessment, and maybe the forthcoming statements, next few statements will be richer in terms of both analysis as well as forecasts. Prasanna, can you smell one more cut? Any more cuts, or that there is nothing in the statement that gives you that comfort?
Obviously, from the statement, I don't think you can kind of gather too much, because nothing much is, they haven't spoken much on forward-looking expectations. But in any case, if actual data is undershooting the fan chart which was put out in the statement, that itself shows that, or that itself tells you that then those upside risks won't materialize. So definitely that does give rise to an opportunity to cut. But in any case, I think also if you look at the tone of the comments by the external members, at least, I think it's definitely leaning on the dovish side. So in that sense, I think, like somebody else pointed out, it would be very difficult for them to kind of turn around in the next meeting and say they don't want to cut. Maybe not in the next meeting or the meeting after that, but I think definitely we are looking at one more cut.
Fair enough. Well, let me welcome Jayesh Mehta also into the conversation, the man who will put his money where his mouth is. Jayesh, what are your key takeaways as a bond expert or as a bond trader?
No, I think it's more or less in the line which was expected in the policy itself. So if you look at most of the comment by each of the MPC member, so you can come out with basically three themes which is slightly different. A, they have looked at, okay, your food inflation is down because of various effort on the supply side management, and even your pulses are very much down, and that's one of the big risks taken off. Second is, of course, capacity utilization is much lower, and they have taken the pragmatic view with that the basic confront we have is food inflation, and of course a little bit on the education and the services side, but the major major problem was food inflation. Now that coming down dramatically and capacity utilization not being too high, it seems as long as the food management is supplied, I think management is done well, the inflation should remain in check. That's the way I would look at it. Okay. And of course, they have taken a view on the global fragility also. So, so that's what I would say. There would be one more room before March. Okay.
Well, Jayesh, if you solely looked at the statement tomorrow, how would you trade? Would you think the market will factor in because of these statements further dovishness?
Not really. I think this statement would be because it was, if you look at it, most of the guys had taken the same view, even with the policy out when the policy came, right? Okay. And I think food being the critical thing, and that is being done, and I think we have taken a pragmatic view that is the supply side management which has controlled the food dramatically. Yeah. And if that remains with the good monsoon, that remains good, there could be, unless the global shocks happen.
Okay, so tomorrow, no extra reason to go long bond?
No extra reason. The same reason.
Merely confirms.
No, but the same reason continues to go long bond.
Okay, but no extra reason. You were always seeing a reason to go long bonds. Siddhartha, now if you have ruminated over the statements and the flashes that are on the screen, any further takeaways for a dealer or even for an economist?
Well, the interesting thing, as I mentioned earlier also, so in this particular, the special characteristic of the RBI MPC meeting is that it puts into public domain the individual statements of all MPC members, which is not very common in case of most central banks. Given that the kind of dovishness in this particular statement they have shown, from an individual accountability point of view, it will not be easy for them to differ much later on. And currently, if you see and most probably that way, policy reaction will remain data dependent. And at this moment, there is a tendency of inflation trajectory to undershoot, at least for the next 3-4 prints. And even if there is some kind of an upside risk towards the end of the financial year, it will possibly be short-lived. Our sense is that even in 2017, average inflation is around 5%. That definitely leaves a little more room for some more room for more easing. We definitely factor in one more rate cut.
Well, at 125 basis neutral real rate, an average of 5 does not give that much space. But I think that's a very important point you make, Siddharth, that since every member has been asked to give a statement or has chosen to give a statement.
You definitely have room for one more rate cut?
Yeah. No, I take that point. But I think the more important point you're making is...
One more rate cut. And there is a possibility that at some point of time, the RBI might refer to some other rate rather than the real repo rate. They have not pegged themselves down to the real repo rate. So we should not think that it's the real repo rate only to look at.
Yeah, to be fair, they have been completely unpegged about everything as far as this real rate is concerned. Sometimes it is, like you said, 3 months forward. Sometimes it is 1 year forward. How the neutral real rate is arrived at, what is the potential growth assumed, what is the savings and investment rate assumed. None of them have been so far elucidated. To be fair, these have more been media questions and they don't necessarily have to tie themselves down. But the point you make is well taken, that since every member is making a statement, it will be very difficult for them to disown these statements because it will be quoted back to them. Chetan Ghate saying the persistence of core inflation remains a concern. So if he were to vote for subsequent rate cuts, he will at least have to detract from the statement and accept that core inflation is falling or something to that effect. Likewise, Michael Patra and the governor clearly saying that there is the reason to remain vigilant about the upside risks to inflation are important. So, it's important to, it's a measure of pinning responsibility to each member, making them make their comment in black and white. I mean, just get DK Joshi.
Identifying the name of the member,
exactly,
which is not done in FOMC.
That's exactly what Siddhartha is saying. I take your point that pins down responsibility.
They say a member said that, but here we've actually, identified the person who said that.
Yep. That's fair enough. And my sense is that they would have asked each of them to draft their own statement.
Absolutely.
So they are bound by what they have written. Mr. Joshi, any further takeaways? Do you detect a more dovish committee than you assumed, or do you think this is a very balanced statement that you've got from all the members?
Well, I think I would like to say that this is another step towards modernization of central banking, and the process is more participative and more transparent, as I think people have mentioned it. Now, going ahead, I think the committee will mature as we go along. But I think as of now, I think it's difficult to read anything from for the next policy from here. I mean.
Okay. Yeah, that's a fair point. There have been very few forward-looking statements. I take your point on that, Mr. Joshi. Well, to wind up, the chairman of our Citizens Monetary Policy Committee, Dr. Sen, any further statements or points that you would want to make to the official Monetary Policy Committee?
Yeah, I mean, just a very basic one, which is that the reason that you do have external members is that they bring to bear independent research on what the RBI's internal team is doing. I don't think we've seen any of that in the first meeting. But I suspect in the second meeting onwards, you're going to see possibly differences in opinion about trajectories among the committee members.
Okay, that certainly is something we could expect. Dr. Sen, Shubhada, Prasanna, Jayesh Mehta, Siddhartha Sanyal and Mr. Joshi, thank you very much for joining me in analysing the first set of minutes of the Monetary Policy Committee's meeting. Well, key takeaways from our panel of experts, very little forward-looking statements. It looks like most of them are dovish. Given the statements, it is difficult to not expect further easing of the monetary policy since the statements are justifying a reasonable amount of dovishness. A second point that Dr. Sen made, one would expect that in future policies there will be more attention paid to financial sector issues like NPAs, which impede transmission. So maybe the statements going forward ought to be richer. A third point that Siddharth and Shubhada were making, pinning individual responsibility is a very important difference that is there in the Indian Monetary Policy Committee, distinct from the FOMC minutes. So that perhaps is a very welcome start to the Monetary Policy Committee's minutes. And an important point which many of you agree to and which Dr. Sen put so nicely, this committee had barely 7 days to prepare and maybe 2 days of briefing by the Reserve Bank staff itself. Maybe in future meetings we are going to see their own independent research being brought to bear in their minutes, and therefore richer Monetary Policy Committee deliberations and minutes is what we can look forward to. But for the moment, from the man who puts his money where his mouth is, tomorrow there is no further reason to be long bonds, but there is reason to be long bonds, as he has been all the while, as he says. Thank you very much for watching this special coverage of the minutes of the Monetary Policy Committee.